Hey there, YouTube. I hope everyone's having a good weekend. In this video, I'm going to cover the weekly charts. I do these videos at the end of each week. We look at really the weekly time frames and really try to analyze if there's any changes or anything we can actually pull from that chart to help us as the next week's trading starts. So that's what we're going to go through. But real quick, I wanted to talk about, I had a subscriber ask if I could figure out a different way to post some of these trade ideas that I've been posting out in the community tab, and I'm looking at different ways to potentially do that. You'll see here on the community tab on Friday, I posted out a potential DraftKings short, signaling that it looked like it was opening at a divergent high and it was going to get sold into, and it could be a possible good short with an hourly close below 43.80, and you can see what happened here to actually on DraftKings. They pretty much sold into it, had a little kickback rally, and then continued the selling. So it did work out for a pretty good short. You know, this thing from the open to the close was down about 5-6%. So that's a pretty good gain in a single day, and I did catch some of that. And I posted that, before that the short really had shown up. I posted it here in the community post, but it seems like that's just not necessarily the best delivery channel to deliver these kind of real-time trade ideas and things that actually need to, if you're going to participate in them, you need to know about them quickly. So I'm looking for different options. Leave a comment below if you guys have an idea of what I can do. I've thought about maybe doing YouTube members, posts where I just post these things on the membership. I could potentially send out kind of group emails to all my course participants. If you've bought the course, then I could send out emails directly to your inbox with trade ideas. That's one thing. The thing is, I don't want to get completely tied to this channel where it requires all my time to manage the channel. I'm not trying to create a job or something with this channel. So that's one of my reasons why I've been hesitant to start like a live trading chat room and things like that. A lot of the YouTube guys, they'll just open up a YouTube live session and they just sit on there for 3 hours talking about the market, and I'm just not exactly interested in that. So leave a comment below if you guys want me, if you have some ideas. All right, moving on, let's look at the weekly charts. I'm going to start out with a couple trade ideas that I've been looking at. These solar stocks look like they're about to break down. Here's what I got for solar. So I was watching it closely on Friday, seeing if there was some sort of a trigger. We just didn't quite get it, but we might next week. On the weekly chart here, you can see we have a clear uptrend right here, and we have negative divergence right there. Let me get rid of that one, and I'll show you guys right there. Negative divergence on the weekly chart, and as I zoom in, look at that candle right there. Big bearish engulfing candle where it engulfed 4 weeks, the 4 previous weeks. So a whole month's worth of gains were lost essentially within this last week. But it still didn't break the trend line. So I need to see, right now, bearish engulfing candle is a potential reversal candle. And a reversal candle on the weekly usually means major trend changes, but we need to see follow through. So I'm looking for a confirming candle and a breakdown. So on the weekly chart, there's definitely a reversal. We have negative divergence. On the daily chart, we just started to creep below. So we'll see how tomorrow opens up, if they can recover this or if it breaks down. If it breaks down, let's say we gap down tomorrow, that's your sell signal on this one. That would be, a short entry. First level of support, I think, is right around 69. It's about 69.60. And then there's kind of some gapping action right below that at about 65, 66, we'll call it. Let me mark that out. So that's some levels of support. We should find some sort of support right in there. But again, if we break trend, then that is a sell signal. I'll be getting short on this one. Sticking with the solar stock theme, here's run. This broke trend on the weekly chart. Here's your breakdown right there. We did not really have negative divergence on the weekly chart, but it's there on the daily and the hourly. And, I don't need negative divergence on the weekly. Usually I like to see it on the daily. The hourly is good for a smaller trade, and the daily is usually good for a trend trade. We did break though, and what happened for the last couple weeks, we've just been back testing and getting rejected at resistance. You can see rejected there. This week we didn't even get up to resistance and we got rejected. So there's some weakness here in these solar stocks. Let's look at TAN, and I am short run. Here's TAN. No reversal candlesticks that I see. We do have this clear uptrend. It's been walking up, and if you look here on the weekly, we do have bearish divergence right there. So higher weekly price that was sold into, that was a divergent high this week that got sold into. We now have negative divergence on the weekly. So we're just waiting for the break of the trend line. And I suspect that when these things break, they're going to move quickly to the downside. They're kind of bubbly, basically. Here's Plug Power. Weekly chart, you can see we have an uptrend right here. We have negative divergence that has been building over the last many months basically. No reversal candles and no break of trendline support on the weekly right now. So I don't see any sell signals on this one on the weekly chart. Now again, the weekly is bigger picture stuff, and you can get sell signals on the daily chart even if they don't exist on the weekly. So we'll narrow that down, but I am seeing some negative things happening in some of those other stocks starting to set up. There's no entries on a lot of these. They're just set up for downside movement, but we it's good to know about the setup before you want to be first to the game, not last. Here's BABA, and I don't know about you, but that looks like a pretty solid breakdown of trendline support to me on the weekly chart. Big weekly candle last week on BABA. It just got taken behind the woodshed. You can see down about, at the low, it was down about 15.5, almost 15.5%, and it closed down about 14%. So big sell signal on the weekly chart. And I was looking back at past history of BABA on the weekly chart. I can't find a candle that is as big of a breakdown. There's a big one right here. You can see that's a relatively big one. I guess that was about the same. There's about a 15% candle right there. And you can see that, what came to pass in the future was a lot more downside. From that breakdown candle, obviously it had a little kickback rally, but it still had another 35-40% to go to the downside. Again, here's another breakdown candle right there where it gapped down and moved. That was a drop of about 12% or about 13. And then that still had another, 16 or so percent to go. So big breakdown candle. I think there's more downside in this one. Obviously, this is not the most objective area to just get short here. You look for kickbacks into resistance to short things. ExxonMobil, big gap up last week, but they couldn't break above that first resistance right there at 36.32. They couldn't get a weekly close above it. So again, to me, that tells me probably some more selling. But it kind of closed right in the middle. You can see the range last week. We were all the way up here and all the way down here. So pretty wide range and closing right in about the middle. So we'll watch this. I think there's more upside in ExxonMobil. I think we're getting up to 41 roughly. And I'm going to be watching for that, but we could easily pull back and down into some support levels before moving higher. And there's CVX on the weekly closing above my profit target, my second profit target. I misspelled my label here, but I had two profit targets and we hit that profit target pretty quickly. With a huge gap up, I took profit and we moved on. Chewy here on the weekly, it held support. So here's your uptrend line right there. We dipped below briefly, but intra-week couldn't get the close below. So it's not a successful breakdown of support. It held support. So that's bullish in general. So we could have another little thrust up, putting in another divergent high, and then break down. Again, you want to see that solid breakdown and close below support, and we just didn't get that. So here's BBY closing right on support on the weekly chart right there. And so we're waiting for that breakdown. We do have negative divergence in the weekly chart, so I think we're gonna get a breakdown, but it's not there yet. So we have to wait on the weekly chart. All right, let's flip over and look at the markets and some sectors. So triple Qs on the weekly chart. The way I read it doesn't look extremely bearish on the weekly chart. It looks like a continuation of this uptrend. You can see that if I get rid of the lines we've been making, here's a low right here, here's a higher low, we had a high, a slightly higher high, wasn't able to close though up here. So I think, watching this line right here, this level of about 297.32, a weekly close above that, well, that puts in, I think that sets us up for a backtest of this green trend line. And I can barely scroll up there because it's way up there, but that might be around the 322, 325, somewhere right in there on the triple Qs. So watch for that. If we don't and we continue selling, then, I think we're heading down to 268. I think that ultimately the weekly divergence, the negative weekly divergence, you can see that we're just losing momentum. And each time we get into this, I make a new slightly higher high, it's a divergent high that gets sold into. That's the price action that we saw last week. They gapped it up and sold it off up there. So I think that price action is pretty bearish. And so what I'm looking for is actually a move down to down to the bottom of this price channel right here. Maybe that's at 229, 230, 235, whenever we actually get there. But I do think that's, where we're heading. And I just think that due to a couple things. One, the price action that we just saw last week with big reversals in place. Two, we're on the upside of this price channel right here that's been in place for since 2009. When you get to the outside of a price channel way up here, it's a high probability that you fail and come back down within the price channel. So probability tells me we're coming down. The price action that we saw last week was pretty bearish with the big reversal that we saw. That tells me we're probably coming down. And then I look at the SPY and I see the SPY trading on this big trend line going back to 2009 that has had lots of reactions to validate it. You can see reaction here, reaction, break in 2018, back test from below this is your COVID drop right here. It was back testing right at the moment in time, and then boom. So this was most likely going to go down. It just went down a lot more and a lot more impulsively due to the black swan that showed up. But technically it was set up to go down. So I firmly believe it was going to sell off pretty impulsively regardless of the COVID thing. But we sold off, and then we're running back up and looking like we're in the area where we're almost doing another back test, but we could easily get rejected. When everybody's looking at one level, and this line right up here, a lot of people are noticing it, and I've seen it all over YouTube now. They're talking about the megaphone and everything. So my trend line is no longer, there's more people that notice it now. When everybody's looking at it, usually you don't get there. You do one of two things. You either overshoot it, you get up there, and if you get up there, you're probably going to overshoot it and move higher, or you make it look like you're going to get all the way up there, but the sellers step in early, essentially, and they front run that move that they're anticipating to happen. So we're close enough where the sellers could step in, we could sell off and start to make a downtrend. Look what IWM did. So IWM made, it broke out intra-week, closed right on support, 173.70. Maybe slightly below, but basically right on it. So on the weekly chart, there's your close right there on that line. Now, if we break down next week, then that was a false breakout. And I think that's probably in the cards. It tells, we could obviously break higher. I don't see negative divergence exactly. So we could go higher, but if the rest of the markets break down, then I find it hard that IWM is just going to do its own thing and move higher. And if it breaks down, then this will be a divergent high. You can see here, if we break down and the RSI starts to turn down on the weekly chart, then you'll have a negative divergence in the RSI. You won't have it there in the PPO. Looks like the PPO burned through it. So the PPO is not showing that that bearish sentiment as much as the RSI. So again, we would need to see it break down. But if it does, then this high that we just made, this all-time new high actually, would be a divergent high that will prove to potentially be the top of this market. Gold hasn't broken its bullish trend. So here's the bullish trend line, this red line on the weekly chart that I have in gold. And gold is in a bull market, clearly. It hasn't broken bullish trend. But what I'm looking for is an intra-week dip, a breakdown to about 1790, 1800, somewhere right in there, and then a recovery. That would be extremely bullish. And I think that's what's going to happen. I think we're going to break, run down, tag this 1790, 1800. Where's that level come from? Well, that comes back from the 2011 to 2012 resistance level. That was a major resistance in the last bull peak. We had the big bear market, and then it broke above. And see, when it broke above, look how impulsive that is. So it got up to that former resistance and just ripped higher. Really impulsive move. So that is a bullish breakout. That's confirmation that this is a bullish, this is a bullish chart. But now you look for the back test of that trend line. So I'm thinking we come down, tag it, and then continue the bull market is what I'm looking for. So I'm looking to be a buyer of gold mining stocks when or if we do a back test down there. And I'll look for bullish divergences and bullish chart patterns to set me up in those positions. XLV, second largest sector outside of tech, is looks bearish to me, longer term bearish, because here's the thing. This is going back to 2009. This is your bull market in XLV. So you can see we held this trend on the weekly chart for all the way since 2009. We had tests of support, lots of tests right in here, but it broke in 2018. And that's the thing. The bull market broke trend in 2018. And most people don't realize that because it's made a series of new highs, but these highs are, to me, are back tests of that major trend line, which tells me that this is the topping pattern, that we're topping out, and then we're going to start a new bear market, which is not going to be a 1 month just plunge, but more a multi-year, kind of steady drop of prices, and then you'll get the plunge probably towards the end of that bear market. But we broke, back test here. They recovered a little bit, but just briefly, and then it failed. Another back test right in here. And then recently, we're coming right up back into resistance. Again, when everybody sees the trend line, they might step in early. So if it stops here, we start to roll over. That might have proven to be the peak of the, of this market, basically. The trend, the bull market trend died in 2018. All of the last few years have been topping pattern that the Fed has propped up. And now maybe we start the bear market. That's what I see in these charts. When I look at when I'm talking about the longer, bigger picture stuff, a lot of people ask why I've been bearish. Well, it's because this charts that look like this. This is a 10-year chart. I'm not going to flip. I'm not going to flip bullish when you have a 10-year chart pattern that's been broken and all we've been doing is making a series of back tests but getting rejected at resistance. The thing is I don't know, when the back testing will stop. You can back test for years, obviously, on this big chart pattern, and I don't know if we're going to do another back test. You don't know, but what this chart shows me is every time we get up into resistance, it gets sold into. So I think when you're right up near that resistance, you want to be looking for downside price action. XLF. Same thing. XLF, I've got a couple charts marked out. I've got the 2009 lows, and we broke that back in 2018, did some back testing, and then we failed. Now we're kind of popping up here into this secondary trend line that I've got marked out. This one's, not as clean of a chart, so I'm just kind of watching it, but potentially if it pops up to 28.72, that could be resistance. I think some of the other charts are just a lot cleaner and easier to read, so I'm not trading this right now, but I do watch it. XLK, so tech is the same as triple Qs, hasn't broken its bull market trend. Tech is still in a bull market. So you can see here's 2009 lows, reaction on the weekly, reaction there. There's your COVID drop. It fell right to support and ramped off of that. So tech has not broken its bull market. And that's the reason why the rest of the market, the S&P 500, continues to make a big topping pattern from what it looks like. So now, if or when tech breaks, that will most certainly be the end of the topping pattern that I see in the S&P 500, which could be coming soon, maybe not, we don't know, but obviously still in a bull trend. But I am looking for it to come down to the bottom of this trend. XLK, that would be a move of about 30% or so, depending on when we get there, 20-30%. Which is not unheard of. I mean, the thing's up from the lows, it's up 80%. So to drop 30%, I don't think is that crazy of a move for tech. Here's consumer discretionary. Here's your 2009 lows. This one, you basically had, this one could be adjusted slightly, but basically this is the trend line I've got. It's close enough for such a big aggregate chart like the weekly chart. And you can see back test, we broke in 2018, back test, and coming up for another back test. So all the price action since 2018 has been back testing this broken support. When I want to be bullish, when we have a bullish trend and we're above support, I want to buy or be bullish and buy at support. I want to be bearish when we break a major trend and we tag or run into resistance. And so up here, I'm definitely bearish. Okay, guys, well, that's all I got. I've been flipping through some other charts, and I think that's about good for this video. So just to wrap up, leave me a comment on how you want me to deliver some of these trade ideas. I'll look at different options. No promises on anything, but I'll definitely evaluate the different channels that we can do it on. And then also, take my trading course, my trading and technical analysis course. It will help you when I'm going through, through these daily videos. You'll have a better understanding of how I'm approaching the charts because it will give you the tools that I use every day. So take that. If you haven't taken it, it's $99. I think that's a good investment in your knowledge for learning a new skill that can make you a lot of money if you get good at it. And that's all I got, guys. Thank you. See you guys tomorrow when the market opens.